But is it a repeatable strategy? Can you copy and paste it, or can you at least learn it? I'm going to say no. Once where it happens a handful of times a year. You know what, OT? One of the things I'm envious of Nick about actually is his ability to trail stops. I don't do that. I'm completely happy with doing it because it's worked out for me quite well. But for example, let's say I was in this short, I would be taking profits at this support just because that's the way I trade. It's the way I learned to trade. It's just what I've always done. It's just my style. However, there are situations where, let's just say again, let's say Nick was also in the same trade, where he trail stops and he could catch this entire move, and that would be a 6.66R, and I would have taken like a 1.88. So I made money, Nick made money, but the idea of trailing stops continuously, I can't do that. I don't have the patience for it. I wish I did, but again, it's about being able to recognize where are your shortfalls. Can you fix it? Can you not? Do you want to fix it? But that's one thing in trading. If I could change something about myself or my it's not even the strategy, I guess more my mental approach is just sit. Hard trail stops in Forex. I can do it to a point, but I don't know. I cannot tell you what it is, but I just don't like to trail stops. I wish I could, but again, it's just not me. So I'm quite happy going to 1-to-1s, 1 to 1.5, 1 to 2, and that's pretty much all I'll do. If a trade gets to 2.5%, I'll probably just cut it there. Some people might view that as a negative. I view it as a positive because then I know my expectancy. But anyway, let's move forward. Okay, let's just again quickly read. Euro pound's moving nicely, which is expected. We are, as I said earlier, the euro does make up about 50% of the DXY. So if we are seeing a pump on the DXY, we're likely to see an outflow then of what's happened there? An outflow or capital outflow from the euro. New Zealand yen sadly hasn't pushed much higher. I'm saying sadly, it's already a very, very clean trade, but this one's going to be long. It's going to be a long hold because this isn't my trade. This was sent by one of my traders. So I'm just going to let it run, follow his instructions on that one. Do I go on lower time frames to execute or just the H4? Oh, wait, hold on. Sorry, I've just got a message 3 minutes ago. Let me just quickly answer this question and then Chris will come on. I do use lower time frames. So if I'm watching the H4 for an entry, I'll go down to the H1. I'll watch for bullish or bearish candle close. Then I'll look to enter on that. And then I'll actually manage to trade on the H4. The H1 is just to get a better entry where possible. Anyway, guys, Chris Pulver is here. Chris, I apologize. I didn't see the messages. I left you hanging for a couple of minutes. My bad. Anyway, guys, have a good day. Enjoy the rest of your weeks. I'll speak to you very, very soon. Stay safe and don't get margin called.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Welcome to CPI extravaganza. Here's the CPI numbers this morning. Month over month, forecasted for 0.3 came in 0.2, but higher than previous at 0.1. Core CPI year over year, forecasted for 3%. Previous was 2.8, came in 2.9. So less than forecasted, but more than previous. Headline CPI, forecasted 2.6, previous 2.4, came in 2.7. Higher inflation. Go to your edge finder, higher inflation. You're going to see the trend is higher. Okay. Why is the market gapping higher? It's crazy. But I still think, I said this week in some of my other videos, like 6,300 is going to be a key level this week. If we can't really crack and stay above 6,300, I think that's a spot for prices to start falling a little bit, start turning over a little bit. Let's go to inflation data here. Go to our headline CPI, and here's our 2.7. So if we zoom out, let's go to last 5 years. There we go. So when everything started to kind of normalize, that would have been summer of 2023 after the peak in 2022. 3% is pretty much where we're going. And we have 1, 2, 3 prints, again, trending higher. Does this mean that this is a big second wave of inflation? Not necessarily, but this also gives the Fed more reason to push back. I am curious if today's futures watch tool, the Fed watch tool, has changed anything at all. It might just firm up that they're going to pause at like 99% for July. Let's see what the probability shows. Yep, so this was 95% yesterday. Now it's 97.4. The Fed is still looking to cut rates here in September. I don't know. I wonder if they're going to. Maybe Powell with, hey, look, our inflation readings and look, all this stuff lagging. I get it, but you're clearly not going to hear anything good coming out of Trump's mouth with regards to Powell. Trump wants a very dovish Fed, period. Some are arguing that that's the right play. I think that is very similar to what we saw Nixon do to seek re-election with Arthur Burns until everything broke and we had hyperinflation that Paul Volcker had to break. I think that Powell is of that legacy mindset, like don't let inflation be what crushes this market. And look, man, we're sitting at all-time highs. I think it's kind of silly to also be cutting crazy amounts of interest rates. So I mean, if we're gonna do like one cut, understandable, but having like, I mean, this is forecasting like 5 or 6 cuts by the end of next year. So we're still of the mindset like inflation is going to improve. Well, we're not seeing it by the little bits here. We're not at target to 2% inflation. We are still trending between like this 2 to 3% area, and maybe that is, even though we're not being told it explicitly, maybe that is the reality of the Fed. If we're staying between 2 and 3%, we can kind of live and accept and operate in a 2 to 3% inflation. It's not that prices are going lower. In fact, they're not going lower. Prices are definitely more expensive across the board. It's just that they're going up slower than what they were. That's all this inflation is. We are just getting a hidden tax every single year at 2.7%. That's what this means. So it feels better to have a hidden tax at 2.3% or sub 2% because you don't feel it as much. But when it's more at the grocery store, more out to eat, more at the pump, all that matters. Okay. All right. So here we are, cracking all-time highs again on the Nasdaq, cracking all-time highs in the S&P. We had some cracked all-time highs, I think, on Nvidia. Nvidia had a huge gap to the upside, up another 4.7% on Nvidia. Impressive stuff. I do have some calls on Nvidia this week that I want to roll. Right here, I have the 100 shares collar trade. I own the shares at like low 100, so I'm still up a decent chunk of profit. I'm up $3,400. The put is worthless. I'm just going to let it be worthless. I'm obviously behind the 8 ball, like I'm $40 in the money on a covered call. But the best part is I can take this Friday expiration and I can just roll it. So what I'll probably do here is give myself some room. I'll actually look at it right now. I'm not going to roll this until probably Thursday. But if I take, I'm going to remove the put side because that's just going to expire worthless. But the call side, let me do a quick roll here and see what it looks like. So if I roll this, let's say out to August 1st, keep the strike 33 cents. Like that's kind of a crappy move. Let me go out a little bit more time. So if I go to the monthly expiration here, I can keep the strike the same at 130. And this is so far out of the money that I'm probably gonna have to go. Let's go end of August here. So end of August. Keep the strike at 130. Like I get 100 and $150, $170 if I roll it. Keep the strike the same, make some more profit. I mean, at this point, it's like it's still way out of the money. If I roll it up here, I pay a debit to roll it up $5. That's really crappy, actually. So I'm not going to go out so far that, well, I mean, I don't know. I'll play around with the roll prices, but if I go out farther, I can roll this out to September, up $2. So that's probably my sweet spot, is rolled out to September. That's another 63 days in time, but that 63 days in time gives me essentially a $2.40 increase. So of all the shares that I have, all of my accounts here have all these accounts that I'm highlighting have some NVIDIA. These were earlier accounts. So all these accounts have NVIDIA. If I take a trade for increase my strike to 132 and grab 35 to 40 cents on the trade, so 240 is my increase on 1, 2, 3, 4, 5, 6, 7, 8, 9. So I make $2,100 just by going out extra 60 days. Like it's okay. It moves the needle. Um, I wish I let NVIDIA run super hot and for a really long time, but I didn't, because when it was down to $100, I was like, well, I'm just gonna sell some puts. Now, at the same time, I did just close out a put today. Let me see if I have this in Pulver alerts. I did close out a naked put on NVIDIA at as this was dropping. I sold a 70 put for like $3.50, and I closed it out today for like $3.30. So let me double check in Pulver alerts here. Check on NVIDIA. So I have that was a call Condor that worked out just fine. Okay, this would have been back in March and April. I'm just letting it expire. The trade was originally like a December. I kind of did like a leap, like a naked put leap. So I sold here. So this naked put was a $70 put, pulled in $3.45. I closed it today for 23 cents. So that gives me 345 minus 23, 322 out of a max 345. I made 93.3% of that max credit. So that's a nice little winner this week. So NVIDIA 345 naked put, closed it at 23 cents. 93.3%. So I'm taking that winner, and then here's my shares. There's my collar trade. I'm probably going to roll this one out to September because I get a little bit more time in the trade. I can roll my strike from a 130 up to 132, which gives me a $2 bonus plus an extra credit, and that'll give me an extra $2.40 in all these accounts. So again, it doesn't help a ton, but it's better than like, I'll just take my profit. It's like I can get extra $2,000, and I can keep rolling, keep messing around with NVIDIA. Give the market some flexibility. Like if it pulls back, that's fine. I'll make more money on a call if the price pulls back, which I still think the market pulls back a little bit. Okay, so anyway, Nasdaq is poking all-time highs. NVIDIA is at all-time highs. That's probably why the Qs are up so much. Let's see how the other Mag 7s are doing. Apple sideways. Amazon creeping up to some fresh highs. Broadcom creeping up to some fresh highs. Still overbought. Google doing better. Meta sideways at all-time highs. Microsoft sitting near all-time highs. Netflix earnings this week on Thursday, by the way. I did put a trade in yesterday on Netflix, trying to see if we get a pop-up on news. I'm going to fade that around the expected move that I calculated. NVIDIA is probably the big reason, like the NASDAQ is up and the S&P is up. Okay, everyone know the news here? It was like those H2O chips are going to be allowed. And that was like originally why NVIDIA was talking about like losing $8 billion was because those chips were being delayed or not being able to be sold. And now all of a sudden it's like, no, you can sell them. And so NVIDIA's up on that news, which gives me more reason more reason to continue to roll the ownership that I have and continue to roll as long as I can, where even if I'm not catching up with all this appreciation, I can just keep rolling in time and still making a few $100 every 30 to 60 days. So I can turn NVIDIA, I know it's totally a growth stock, but if I can turn it into, I'm in the money with a covered call, I can just keep rolling and rolling and rolling, and I can still grab an extra couple $1,000s out of it. I'll just keep doing it. If for my portfolio, I can roll out to September and then roll out to October, November, roll out to December, January. If that gets me an extra $6,000 in my portfolio, $7,000 or $8,000 in my portfolio, it's worth that versus letting it go for a stock that's going to continue to perform well. Why is there suddenly a witch hunt against Jerome Powell? That's your JP, right? It seems like he's all of a sudden. It's just Trump. I mean, Jerome Powell. Look, I don't know if you've been following the Fed. It's like I like Jerome Powell a lot more than Janet Yellen. I like Jerome Powell a lot more than Ben Bernanke. I think he's been a good chair. I really do. You know what you get with him. I think he like presents well. I know it's certainly not been an easy term for him. Like these last, this will be 8 years. I think he's going to complete as Fed chair. But it's like it's funny how you say witch hunt, because like how many times did Trump say that about himself? This is a witch hunt for Donald Trump. Why is everybody after me? And yet he's turned it around like he's literally trolling the Fed chair. Um, I don't think it's a great thing to try to get him out earlier. I mean, honestly, it's like this is why I talked about Edge Finder, because if we're talking so aggressively on like get rid of Jerome Powell, he's the worst, he's costing the American taxpayers so much money, it's not true at all. In fact, I think if you put a yes man in the Fed chair, I think the market reacts completely wrong to that, because all of a sudden we have a non-independent entity. The Fed is supposed to do what's in the best interest of full employment, liquidity, stability, inflation. Inflation is the big thing that's like, look, if we are going to be carelessly dovish and just melt this economy higher, I think we go into like I'm going to say mild, but I'm going to say hyperinflation. Like, I don't know if we have 10, 15, 20% inflation, but I think we go from 2% to 3.5 or 4%. Like everything now, it's like we are so close to like this breaking point of so many things: housing market, employment market, consumer. If any of those things, if any of those three things break, like truly break, the US is going to go into recession, and it will be bad. And the markets will react accordingly. And so every time it becomes an official recession, the markets are already down 10, 15, 20% usually. All that stuff is lagging. But I'm telling you, like the resiliency of the US market right now is because housing is still stable and not broken. Employment is still stable and not broken, and the consumer is still spending. Those three things are propping up these markets and keeping everything running on the hype of AI and the hype of profit margins and the hype of everything's good and resilient. But if we break something, the fastest way to do that is troll the Fed and force them to cut rates, or get rid of the current Fed chair and put somebody in place to cut rates. And all of a sudden, what does that mean? That means that you have a Fed chair that is pretty much a puppet for the president. It's no longer independent, if you ask me. So I don't think the market reacted good to that at all. And I don't think that there's even the power to do that. I don't think Trump can do anything other than talk about it and troll and be a nuisance, and Powell can just take it in stride. And I hope he has the courage and the stones just to stick it out and just do his thing and be like a strong, transparent Fed chair until his term is up, and then we'll see what happens next year. But it's like I think he's better than that. I respect Powell enough in this role for the last 8 years or so, or going into 8 years, that he just does his job. And legacy wise, it's like he didn't cater or he didn't crater to Trump, which I think is great. And hopefully, like the Fed doesn't do anything silly where they have to like backstop the market. They already did. I don't think really people recognize they backstopped the market in 2023 with that regional bank crisis in January. They backstopped the market during COVID. They backstopped the market in 2019 with an aggressive pivot. Like all these things have been happening that it's like, yeah, the Fed helped. But from 2020 onwards, it really wasn't the Fed. It was mostly the government. Government spent. And from 2020 to now, it hasn't stopped. This big, beautiful bill, this was a tax extension. Wasn't a tax cut. This is a tax cut extension, and this is more spending. So this is more fiscal policy, just like we had through the Biden administration, and allows the market to run hotter and stay bullish. So anyway, if that happens, Trump's will blame. Of course he will. I mean, there's no blame of anything that Trump's going to take. He's no accountability. He's not the guy that's going to take accountability for the market cratering. But what it shows me is like Trump gets very vocal when everything's good, right? Everything's good. He gets really vocal. We're starting to see more trade war stuff. We're putting tariffs on copper in Brazil. We're talking tough on everybody. But if this market made a quick like 5 to 10% correction, Trump will probably shut his mouth. Right? Or he's going to blame somebody else for why the market's down. It's not me. I told you to cut rates. You're way too late, Mr. Too Late. Right? But look, this market has to turn. This market has to turn and give a little bit of ventilation. A melt up to me, and I really mean this. I don't know where the top is at, and I'm not trying to call the top here, but a market melt up to me at 6,500 or up into the 7,000s, that is a freaking bubble waiting to happen. Like you don't have these. I mean, look at what happened during COVID. As an example, here's our run. We're up about 30% on the S&P since the April lows. Okay. If you go back to the COVID crash, this is 2022. What did we do during COVID? We obviously had an extended move. Like we had this big bottom in COVID. We got back to all-time highs, and we had a 10% correction here, and then we had a 9% correction here, and then the market figured out like, hey, monetary policy plus fiscal spending, boom, 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 all the way up. This market ripped up 117%. So we're up 30% off these April lows. There's plenty of ridiculous amounts of upside before this top is in. So it's not worth it to call a top. But understand that a melt up to this degree is going to be met with another nasty correction. And that could be another 20, 30, 40% correction. I know it potentially gets worse and faster, but I mean, I don't think it's out of the cards to have like a 30 to 50% correction at some point in the next 5 years, And the real question is like, are you protected enough for that? Are you prepared for something like that? Again, you can set those trades up where, every 6 months or every year, you got some really cheap hedges that would help protect your portfolio through a downturn like that. Obviously, if the VIX goes from 17 up to 60 again, I'm going to sell a lot of premium. But I also want to make sure there's just plenty of margin for error where it's like, hey, look, the index can drop 35, 40% before I have any risk. Well, if I still took assignment, I would just be owning SPY, owning Qs at a massive discount, and I'd work my way through the trough. And there's a lot of upside there. But I'm just showing you like the power of these melt ups. Like this could be like a lot like COVID's playbook, which was, we don't have monetary policy turning the way that it did during COVID, but we do have fiscal policy for sure, right? And so this spending bill, which is essentially what the tax bill was for the U.S., is a spending bill, and we go all the way up here, and then we had a 10% correction. So there, like COVID did acknowledge, like at all-time highs, the market was going to pull back. Cool. So if we do the same thing around these all-time highs, do we go just up through the all-time highs and then have about a 10, maybe an 8 to 10% correction? I think it's very possible. So that's all I'm saying. Like it just don't be surprised on a daily time frame if we at least get a pullback. I posted this video yesterday in my journal and Pulver alerts. You can check it out. But I think we have a pullback towards the 50 period moving average. 6,000 is a nice round number, and if we fall below that, that's probably the high low, lower high, lower low. This to me is a better spot to start buying some more. If we get back to all-time highs for the year again, great. But look, if this is a bullish pattern, if this is a bullish pattern, and I know you can see, I've got traders out there that are telling me this, like, oh, Chris, this is going to be like the biggest rising wedge. This market's coming all the way back down. I mean, if the market comes all the way back down April lows, this is one of the craziest markets that I have ever seen, because you go from the most negative sentiment, trade war, systemic risk, to the most bullish pivot to coming all the way back down again. Like approval ratings and trust in anything like government, markets, it's all out the window. If you see like 20% peak to trough, up 30%, 20+% peak to trough in the same year, it's like, that's insane. Like that's head spinning volatility. And it's going to drive, I mean, honestly, what it's going to do is probably just drive traders into fixed income, which is a terrible investment unless you want zero risk. There's still risk in the markets. There's still risk in the Fed. There's still risk in bonds. There's still risk in the dollar. Like there's still risk, but that would just be insane. So I think that right now we're so pro growth focused that even if we have a pullback, to me, this is a bullish pattern. This is a high that we just took out. Here's a structure trade down to the lows. We have a recovery. To me, this is a pullback area, and all of this is just opening up opportunities to buy a low, like buy a higher low. And if we buy a higher low, the market keeps going up and up and up and up and up. I mean, look, I don't care if it's the Mag 7, the top 10, the top 20. If you want to know the best performers, trade the S&P 500. Okay, trade the S&P 100 actually. S&P 100 is, let's see here. You've got OEX. Okay. This thing from peak to trough was a little bit more volatile. It was down 22.5%. So it's a little bit more volatile to the downside, but to the upside has been more reflexive. So your S&P 100 is like your kind of cream of the crop. It's not your Mag 7, right? It's a little bit more diverse than that, but still your concentration is like those companies that are doing very well continue to do very well. Okay. I don't think it goes much higher. Yeah, I know RSI. I mean, RSI is a good measure. I mean, I've got a lot of divergence on the time frames. I just have the big levels. I mean, I think we just get a pullback. And it's hard to time this stuff. And I'm not like taking crazy hedges or anything, but the timing of this to me is okay. So we're coming into the 18th, which is a big monthly expiration. We have a VIX expiration as well. With CPI news coming out this week and PPI tomorrow, I mean, are they both disappointing? I don't know. There's just not enough news to really like thwart this thing. If we take out some of this recent clustering, we had like 7 candles in a row here, like sideways 1, 2, 3, 4, 5, 6, 7. This is 8 days. I mean, 7 or 8 days of nothing. So all we have to really look at is if we clear this low, if we take out this low here, which I said was around 6,200, that was a video I posted yesterday. If we're less than 6,200, to me, that's a bit of an interim floor that's breaking. If we break 62, there's room to 6,000. If we break 6,000, there's room to, potentially like 5,800. Okay, I look at this and I don't see that as like a scare thing. I see that as give us a pullback. Please give us a pullback so I can position for this area down here with a wide margin for error, own some shares at the lows, take a lot of income. And if the market just chops around for the rest of the year, fine, I get paid. If the market rips and goes to all-time highs, fine, I'll be positioned for a melt up, So there's a lot of ways to do it. It's just don't keep going up, please. Like, give me something normal. Give me some technicals that make sense. RSI is overbought. Divergence is crazy on the daily, weekly charts. So Ryan says, I think this is a pullback, not a buy. So you're saying what? You think this is a pullback that becomes a bigger correction? The only thing I disagree with that on is, we are looking to see the Fed cut rates this year, and the tax bill has been put out. I mean, the Trump administration has been aggressive about at least doing this stuff now before midterms next year. I think if the market's really going to have like a nasty turn, it's probably after like a big flip in midterms. So maybe like the middle of the second half of 2026. Unless, like I said, I'm telling you, unless the consumer breaks in the US, unless the housing market breaks in the US, or unless the labor market breaks in the US. One of those three things right now, like that's the 3-leg stool that's holding everything up. If one of those legs gets kicked out, then sure, this thing can turn over, topple over. We can go into recession pretty quickly. Like, it's all that sensitive. But I think if it's just stable, not breaking, still resilient, the market finds a way to do just fine. Doesn't have to be melting up to all-time highs and getting another 5-10% higher. It just means like, look, we've had a 30+% recovery. This market can just oscillate for a while. This market could pull back 5 or 10% and just kind of hang out here, not crash, not rip, sideways. Like, traders don't realize like sideways is also a pattern. Sideways is also a cycle. So there's still ways to make money in a sideways market. In fact, that's probably where I personally will make the most money because we've had such a big rip. Like, I'm behind on a lot of my covered calls. Like MicroStrategy is at 390. It's trading up to 450. Nvidia, I'm at 130. It's trading up to 150 and change, 160. Right. So a lot of my covered calls are in the money. Tesla, it's like I've got 270, 280 covered calls. We're trading at 300 plus. Okay. But I'll just keep steadily rolling those out. Right. So yeah, I mean, the retail crowd for me is like, look, I'm looking at buying the dip around like 5,800. If I can get a trade down to 5,800, I'm that trader. Like, I don't care about 6,000, because I think that 6,000 is the first leg. So we hit 6,000, we pull back here, we go one more lower, and then people start to lose their mind a little bit. They're like, oh no, right? It wasn't the immediate dip. It was the dead cat bounce. But if I position here, I think this is more of the trough. We stay above 5,700. Look at the moving averages, by the way. Look at all this support here. If the market fell down to these moving averages and then found support, it goes right back up. If it breaks below that, then yeah, pump the brakes a little bit and stop being so freaking bullish. But there's clearly a line in the sand. If we're below 5,700, then yeah, things look a little bit sketchier, But this structure could easily pull. I mean, just take a simple fib, right? Take a simple fib. Take the low, take the high. And again, this isn't perfect science, but look at your 30 to 50% zone. Like right there, 30 to 50% to me is like a great spot to be looking to buy and look to buy. Well, that was quick. I just hit my profit on SPX. So that's the trade for this morning. Update. Should have let that go a little bit lower, but whatever. Update. Entry 615. Okay, so taking that trade there. All right, so 555. So we are fading off of that 6,300 zone today, which is good. And here's my intraday stuff. So we are heading lower. That's good. I'm looking for potentially a market to move about 1. The VIX is up to 17.1. We might overshoot a little bit from this top. So this is around a 1+% move. I'm not really looking to be a bottom picker today. You know, Confucius say when you pick market bottoms, you wake up with smelly fingers. So don't do that. But 17.13 VIX is going up a little bit, maybe a 1.07% move. So if we are talking about a little reflexive low today, maybe around 62.30 or so, 62.35, 62.30, if I'm looking to maybe grab a credit spread at the bottom. The other flip side of this would be, could I sell like a 6,300 and get paid on that? Let me check this out really quickly on SPX. SPX for today, 6,300. But I can still get a buck for that trade. Let me see the highs in for the day. Let me try a call or a butterfly call spread here. Only if the credits are decent. 62.90 or the highs on the day. So the high today was right around 6,300. Right, I kind of want to pin that high. I don't know if I'm going to get filled in this or not. $0.15. Part of me just thinks it's over trading. 63.5 wide. I just don't get enough credit for that trade. That's way too much risk. Yeah, I mean the VIX is going up. I'm looking at this chart over here. VIX is going higher. So we've gone from a 16.57 VIX up to 17.17. That's just going to increase that potential daily volatility. Again, not trying to pick the bottom on the day, but we are heading back in this sticky zone around 62.60, 62.50. I'm going to change this to a potential like 35 to 30 low for the day. But the nice thing is I said 6,300 should be some pretty solid resistance. So far it is. This isn't a surprise. The market news today was CPI, and it was just kind of an excuse to kind of get this thing positioned, maybe bait some of the bulls at the top, and then let this market fall down and start a correction. Okay. Let's see here. Yeah. All right. So I'll watch and see if we have a bit of a bottom play today. I was looking to sell. I might try to put this butterfly spread in, but if I'm going to take this butterfly spread, I want a better fill. So I'll try to pin this thing a little bit higher towards today's highs at 63. Do we get to 6,300? Maybe 63.05 to be safe. And broken wing, I'll probably risk like the 900. So I'm not taking intense. I'm going to try to get filled for like, let's see if I can get filled maybe 75 cents on this one. I'll try 75. Okay, so what I'm putting in here is a broken wing butterfly. It's a 0 DT. This doesn't have to be like an official Pulver alert because the VIX is spiking up. So to me, VIX is up right now. It's kind of flat on the day, but we have gone up in the last probably 60 minutes. The VIX is up like almost 4%. So I think if this market, breaks through 62.60, we have room to continue to see some hedge flows down into 6,000. Like 6,200 is our floor. We break 6,200, 6,000 is open and easy target. We get below that, I see us going to like 5,800, 5,700. That's where I'm looking to like be patient to buy the dip. So anyway, the trade I just put on is this. I'm looking at a broken wing butterfly like so. The pin price would be 63.05. So what that means is if price is going to come back up today, as long as we don't take out this high, or if we do take out the high, I've got a pin price there to grab a profit trap. So this would be trying to pull in 75 cents credit with a $5 profit trap. And then my risk would be over, it'd be at 63.11. I guess 63.10 plus would be my risk. So as long as price is below 63.10 today, I can pull in at least this credit or even get a bit of that profit trap by the end of the day. But that also, if the price keeps going lower, this doesn't even fill, and it's just a trade that never takes, which is fine. I take a lot of those trades in the zero DT environment because I don't really force trades in a zero DT. I will let prices come to me and set up. So if it takes, great. If it doesn't, no big deal. I will look to see if we get a bounce today around that one. It's like a 1.05 to 1.11% move. That would be where I'd expect the market to show some reflexiveness off the lows. But I'm telling you, man, don't call these freaking bottoms or tops. Like 6,300, I felt pretty good ceiling to see some resistance. 6,200 though, if we don't hold 6,200 firmly and we break below it, we're dropping to 6,000 or 5,900 to 5,800. I don't think that 6,200 floor means anything if it's broken. It's broken, we're dropping a couple hundred points easy, and that gets me right into like a 3, 4, 5, 6% correction. Just on this indicator here, this is again highlighted in the video that I posted inside the journal. That is about a 4.5% correction. Okay, fine. Give us a 4% correction. Could the 4% become 7, 8, 9%? Sure, because we go high, low, lower, high, lower, low. Everyone kind of loses their mind a little bit, like, oh my God, this market, it's just a pullback, folks. But I would say I'm not really that excited about buying any dip until we have a meaningful like 5 to 10% pullback. Okay. All right. So that's where we're at. So the good thing is grab some money today on the daily profit play. I love it. Price is going our way. I wish it would have been more aggressive on the sell side is to get the premium that I wanted. So trade that I took was pretty simple. I just took a trade where I put in a little dead zone and I'm getting paid on the left side of the chart. So I pulled in $60 per contract right there, and I'm taking the profit. Okay, now we'll let the day just kind of unfold. I mean, I'm going to see some red in the market. I'm going to see some red in my portfolio, but remember, I'm just going to be selling a bunch of covered calls as well. Let's just kind of do some spot check here for the next little bit. I think I've got some extra time to run over. Chandler, James, let me know if we've got a guest coming after me, if I'm closing up today, because I'll go a little bit longer. I think I'm good. Yeah, I'm good. I'm good for a bit. Let's talk a little bit everything. So SPX turning off that 6,300 handle. Are the Qs turning at all today? NVIDIA is way up, but the Qs are turning. Look, honestly, I'd love to see this thing like somehow surprise us with a move down like 10, 15 points. I have a bear call spread that's just a bit of a tiny hedge. It's just more of like I think this market's going to fall, but I picked the wrong expiration. I feel like I picked the wrong expiration. I did a July 18th, 540 by 542.50. Or I'm sorry, a 540 by 545, and I pulled in 259. I'm risking, $2.40 roughly. So I end up probably taking a loss on the trade. So we'll see. But if we drop aggressively, I'm going to set this chart alarm at 540, which is right there. So if we somehow get to here by Friday, that's a long fall, by the way. That'd be a nasty spill. But if we get there, I could possibly get a pleasant surprise. All right. Thanks. So S&P is down slightly. Nasdaq is up slightly, but turning down. Maybe this comes back to the gap levels. The Dow is down 0.66% today. Wow, big change on the Dow, and then Russell down almost 1%. So not all indexes created equal. The Russell's clearly a bit more volatile. And I even looked at trades yesterday. I was looking at Russell trades here, and I'm like, I just don't like the Russell that much. I think we still need to have a pullback or correction. I'd love to see the Russell pull back into the low 200s, and I'll start just selling more calls. We go to the VIX. Like I said, the VIX is spiking up a little bit today. Here's a good look at the short-term VIX. So from 16.5 to 7, I mean, we are up about 4% today on the VIX just off these lows. So this is something to pay attention to. We start creeping up in the VIX. We're probably looking at some more downside pressure. Just keep that in mind. Okay. Let's go to the dollar index. Dollar index, as I said, catching a bid off of symmetry. Is anybody long the dollar? That's a courageous trade. It wasn't a trade I wanted to do. I'm not long the dollar, but I am looking to see, okay, dollar catches a bid, gets up into 100, maybe 101, maybe 102 area. And then I'm looking to look for some topping patterns to fade the dollar back down. Okay. Oil, pretty good support at 65. Natural gas, I'm selling calls, but it's catching a bid. I think I have an August 1st UNG trade. Roll to 8. Yeah, so 1650 is my covered call on UNG. We're trading at 15 and change right now. So UNG here, 1556. I'm covered out August 1st, which is only a couple weeks out. This trade, if I get it called away between all my positions on UNG, makes me, I don't know, like $3,000 or $4,000. I'd like to roll it more if possible and just turn it into a bit of an income diagonal. So maybe this surprises me to the upside and we get into like 17 or 18 bucks and I can keep kind of rolling it out, but that'll be just wait and see. Gold, still sideways. Silver, had a big blast off here for those 2 days. It hit, 39.15 on silver is pretty awesome. 40 is a nice round number. I still think silver is a good bid. We pull back. I mean, just look at your moving averages, right? Pull back to the 21, pull back to the 50. This is a bull flag zone, so maybe pull back and checking this bull flag before we get a continuation. Look, even if silver did this, if it runs up here and pulls back, I'm still buying silver at this dynamic support. I think silver is a great trade to buy and still look at the long-term upside, even medium term. Okay, silver futures. I'll wait for pullbacks before I expose some silver futures. Bitcoin's down a decent amount, 123 down to 116. Totally fine. I don't know if this is like a big profit taking area. This isn't close to my measure move. If this is consolidation or recent all-time highs, big level support on Bitcoin would be down here towards like the 108 to 109 handle again, maybe the 111, 112 handle again. Okay. A bit of a concern on Bitcoin to me would be if we came back down to this 90, like this 100 to 98,000 level, and we set in a bit of a topping pattern and we come all the way back down. That would be bad. Like that'd be a bad look for Bitcoin. So I think a lot of traders to see the integrity of this bull market is you want to see a pullback is fine, but you want to see some dip buying and some dynamic support off these moving averages. You can buy in here, buy some confirmation, see if we reach all-time highs again. Obviously, if the markets are down, if the SPY takes a turn off of 6,300, heads lower, I don't think Bitcoin's going all-time highs. So just keep in mind, like there obviously is a bit more volatility, and it depends on some risk appetite to see Bitcoin continue to make fresh highs. Okay, MicroStrategy, pulling back a little bit. I still have an income trade here where I own the shares at like 250, and I'm trying to get it called away at 310, 315, 320. I'm just going to roll those out and up. I think I've got plenty of wiggle room here. There's a lot of volatility, but I wouldn't really be too worried about MicroStrategy until either one, we see like a massive bearish pattern on Bitcoin, or two, this thing comes all the way back up to 541 when it was melting up crazy like that 2 to 3 times proxy. And if it melts all the way up to like 540, then yeah, I'm trying to like time this where I can just get out of my stock and try to get this bumped up to maybe, I don't know, if I can roll my calls up into like the high 300s of this thing still goes up into like 500s. That's a lot of money. I mean, MicroStrategy has paid me pretty well this year. If I look at my positions, MicroStrategy, I mean, I'm up $45,000 on MicroStrategy, and a lot of it is just income. Like I've lowered my cost basis almost $150, and I own like 500 shares of MicroStrategy. So yeah, I mean, I want to see it do well. I'm actually, I could be up a lot more money had I not covered it. But I just thought this is the type of stock where if the downside kicks in, I don't want to be on the wrong side of the downside move. So I put on collar trades quite a bit, but the premiums were just so good I couldn't not take the trade. Coinbase, we're up to 390. I did a call condor. You saw that posted in the Pulver alerts. The call condor should look something like this. So out to the 25th, which is a week before earnings. I think earnings are on the 31st. 58 cents credits what I took in. I have a $5 profit trap. We're trading up to 390. This strike price is around the 455. So Coinbase is going to have to continue to go up another 16%. If Coinbase goes up 16%, I'm going to take on a little bit of heat, but I also have a profit trap in the next 10 days. So that's a lot of potential upside on Coinbase that I hopefully don't see. And so it's a pretty easy like $60 winner. But if Coinbase does go higher, that profit trap in the next 10 days potentially offers me a bonus trap. So, for 60 cents, it could pay as much as $560. The risk is around, I think, $800 or so. What's the risk? Max risk About 900 bucks, 950 bucks, because I went I think 15 wide. So yeah, that's about right. I'm risking about $950 to make 60, but if I have a profit trap, I can still make 550. But I think the higher probability is I'm just going to win 60 bucks in the trade. If we go down on Coinbase, then 60 bucks becomes zero, which is good. Like our 60 cents we pulled in for credit becomes 5 cents debit, 0 cents debit. Just take the profit. Ethereum. Ethereum's made a pretty good run. I'm glad I got in when I did. I bought ETHA. I'm still holding this until we hit a profit target around 30 bucks. So Ethereum, to me, I'm looking to hold on to Ethereum until we hit recent highs at $4,050. All time highs all the way back up here towards 4,800. So this to me was a good structure trade, bit of a catch up trade. Don't be surprised if the market does something like this. We rally, we pull back here, maybe a bit of a channel. We just keep going higher. So if we have higher lows and dips to buy, I wouldn't mind seeing some dips to buy some Ethereum, but I'm already in. I bought the shares. I thought rather than trading options on this one, I just bought the shares of ETHA. This would be up around 50%. So I bought the shares here. If it rips up to my resistance level, then that's around a 50% return. I will probably take profit there to be on the safe side, or at the very least move some stops. I'm not letting this thing turn into a loss. So let's see if it just runs up to hit recent highs. Copper after that 50% tariff news and that big distorted move, it's sideways, but I think a good spot to be shorting, at least in the near term. Japanese yen, wow, big drop in the Japanese yen. So that means that our dollar yen's probably heading higher. So dollar yen is up to 148. This is exactly what I said. Watch this channel, the 143 handle heading back up. I mean, we're higher than this initial, April, May pullback. So it's I think eventually it's still a good trade to just watch, maybe a channel like this. There's a lot of support resistance in this area around the 150 handle. So it might be a volatile range on the dollar yen, or it might do what Japanese yen does best, which is just make everyone miss. It's like you kind of chase the yen, you miss the yen, but maybe it runs all the way back up into 154, 155, becomes a big resistance level and just a big range. I'm not sure yet. So anyway, that's that. Let's go 6J again. So 6J, oops. Here. So that's a pretty big drop in Japanese yen. I will incorporate some more Japanese yen futures if we come back down to these lows. This trade, close out for good profit in futures. I'm going to do the same thing if we come back in, or even get close to these lows. I'll go out probably 6, 8, 9 months, whatever I get in the futures market, and grab a really simple trade in the Japanese yen. Nikkei still not going anywhere. FXY, that's the Japanese yen. EWJ off the highs. It's frustrating. I'd like to see that go a little bit higher. DAX just pulling back. Maybe some sideways price action here, pulling back to the 30% zone or 23% zone. FTSE just off of all-time highs. Argentina back to the 200 moving average. I'm going to hold off on this one. China back up towards recent highs. Brazil off of recent highs. Latin America off recent highs. Mags, Nvidia up to highs again. Does the Mags roll over? We have earnings next week. Mostly Mag 7 is next week, or to the next 2 weeks of trading is going to be Mag 7. Apple. You know what? Let me look at Apple here. I kind of hate Apple, but in a way, it's not that bad. For like, it's cheaper. It's cheaper than buying the index. It's pretty safe. Cover calls aren't terrible. What's like a 170 put on Apple? So Apple to the end of the year. I'm just curious. So as long as you don't blow up a trade war, Apple has like crap tons of cash. It's obviously volatile compared to like the benchmark. Let me see. January 170. I mean, a ratio spread. That's a good looking income trade if you ask me. Like, we stay resilient on Apple. Let's say that gives them 185 days to start mentioning AI. Apple's going to do AI. Maybe that's a good thing. But I get $270 of income. I'm willing to own some shares of Apple. If I took assignment of Apple, 170 minus 5 minus 2.70, I'd own shares at 167. The nice thing about that would be we're pretty well supported on this. This is a yearly moving average. And, as long as we're kind of maintaining like the low in April. So if we just kind of stay nowheresville on Apple, that's a good thing. If we go, high, low, lower, high, lower, low, like I don't want to get stuck in a bad position on Apple, but I think I could also work through it and repair the trades. So from high to low, Apple was down 30+%. I would still be looking to own shares cheaper than that. So it'd be like 170 minus 5 minus, it'd be like 163 and change. I made it own it at like a 37% discount. That's not bad. I think Apple is cheap enough and resilient enough, sideways enough. I'm hoping that comes out okay. So I think I'm going to take this trade. So I'm going to do a ratio spread on Apple. This one, I think I don't have much exposure on Apple right now, so that could be a good one to sprinkle in here. So Apple, this pinch point is out for a while. Cover call on shares that I own. I'll keep rolling those out. All right, so I'm going to take a trade on Apple. So I'm going to go out to January of 170. That's a pretty high delta. There's a good 90% chance of profit on this trade. Plus the assignment, I don't mind owning the shares. If I own shares at one, let me see if I take a little bit less. So 220 and 184. I'm going to take this trade down here. I'm going to do a 170 by 165, take in like 220 bucks of income, and try to flip this if I can. So this account, 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 this account. I'm going to flip Apple for if I had any assignment. I'm going to try to flip it kind of aggressively. So trade is try to grab 215 to 220 income. That's the plan. That'd be 1, 2, 3, 4, 5, 6, 7, 8. So income wise makes me 1,760 bucks by the end of the year. And this 220 if price goes higher, then the 220 erodes down to a 30-cent debit, 20-cent debit, take the profit. Let me see if I get in here for 220. Let's go. So 220 is not filling. Let's try 219. This is below the mid price, by the way. Come on, 218. All right, 218 is getting filled. Good Lord. 217 filled. All right, so this is a trade filling at 217. And to me, I'm looking at it like it's a pretty solid $200 of income with a little margin for error. So if I build this trade out, Apple going out to January. This is a, let's see. All right, so I am doing buying the 170 and selling the 165. So here's the trade. So current price of Apple right around 210. So as long as price stays between 210 and all the way down here to 165, that's my pin price. So we get all the way down to fresh lows, I still have a profit trap there before I'd have to take on any risk. So my break even is going to be around 157. Like I'd happily take some shares of 157 below April lows and flip it with a 2-week, 4-week covered call. Try to make $300, $400, $500 on it. I've got the capital to do that. If price to stay sideways, I keep the credit. Price goes up, this credit decays faster, and I keep most of the income. So let it do its thing. All right, so that trade is in. Let me post this trade. So this will be under Pulver alerts, stock options, and this is new trade. Apple 116.26 expiration. Buying the 170 put. with 1 contract, selling the 165 put with 2 contracts, pulling in $2.18 credit. This is a ratio spread, and I'm willing to own Apple shares if price is less than 165 by expiration. Break-even price will be, actually, there's about a 90% chance of profit. Assignment risk on this one, based on getting assigned 160, it'd be 157. 157 puts me about like an 8%, 8% chance of assignment. My break-even price, if assigned, is going to be 165 minus 5 minus 2.18, 157.82. And I'll add probably a 30-day covered call to repair for $5 to $10 profit per share. So right now I'm looking at a trade that pays me 1, 2, 3, 4, 5, 6, 7, 8, 2.18 times 8. So the likely trade is going to be I make 17.44 on the trade. If I take any assignment on Apple and I repair it, I'm gonna say I'm gonna try to go after $1,000 a share. So it goes from a 17.44 income trade with no assignment to owning it and flipping it for hopefully close to $8,000. Because my goal is to try to repair it, lower the cost basis, get it called away for about $10 a share. Okay. All right. So I'll take a screenshot of this guy as well. Where'd it go? Yep. Here's my trade. All right, that's posted in Pulver Alerts, little Apple. Okay, so this one is profit. Let's change this one up to the 116. And it's a 170. 165. Pulled in 2.18. And that break even would be 157.82. Right? 165 minus 5 minus 2.18. 157.82. Boom. Okay, there's the trade. So if we just kind of hang out here on Apple, that's good. We hang out here, we go up, that just makes us easier income. We come down to test the lows from April. Well, there's potentially assignment risk, and I'll repair it. All right. Let's see what else. What's out out there for mags? I've got some ratio spreads in on Amazon, trying to see if we get back to all-time highs again. Broadcom, I actually put in a little bear call spread that may or may not work. It's got to drop about $15. Google still owns some shares and ratio spreads out to the 135 out of the way. Meta off the highs. I don't mind getting some dips on Meta, but I'm just not in a rush to buy a stock that's $700. Microsoft, I still own shares. This is the dollar cost averaging I did earlier in the year, which was bought it here, and then bought it on the trendline break. And so that allocation is right in the middle around $400, and now it's up about $100 a share. So I'm still going to ride some Microsoft out. Netflix, I'm looking to sell like the 1400 level. I calculated out an earnings play. We have earnings on Thursday for Netflix. Nvidia, again, cracked up the highs with that H2O chip news. Tesla trading at 313. Honestly, Tesla's become just like a really good high premium covered call strategy for me. It's not going very far. It's not going anywhere, in fact. But my calls, I'm trying to play catch up. I've got like 275s and 280 calls that are in the money. But every time I roll them, I'm getting like $2 to $3 per roll for like a 2 to 3 week roll. So I'll keep doing that, and I'll just turn this into an income trade. Tesla has earnings at the end of the month. This is going to be actually next week, the 23rd. Yeah, so we have next week earnings on Tesla. Probably some drama sitting around that one. But anyway, Berkshire there. Bonds. No bid on bonds, man. Bonds are down. This means yields are up. Hey, yeah, Trump. Let's talk the Fed into cutting rates, and the market does the exact opposite. So again, yields are higher. This is that potential like stagflation discussion. Like we go higher in yields and we break some recent highs. It's not a good thing. This like housing, employment, labor, bond market. Throw that in there. If yields rise, that's not a good thing for the markets. That's going to choke off growth. So we'll see. But there's a lot of those factors where it's like everything kind of has to stay stable and resilient for the market to maintain these levels and these valuations. Okay. I think that's what's scary about this thing rolling over. If it rolls over, it's going to roll over fast and probably be a violent correction that, maybe you're ready for, maybe you're not. I know that I'm hedged out to the end of the year, and those hedges take me down to April lows. And if those April lows pay me, they're paying me somewhere between 16 to 1 and 45 to 1. So I'll be okay. But at the interim, I'm also not taking a ton of unnecessary upside risk because I feel like the asymmetry is actually more lined up to the downside. Like we could have some violent pullbacks. And it's just a matter of how resilient, how much of the retail crowd and institutional crowd wants to buy, the dips. So it could be a huge surprise. The retail crowd again has gotten it right, and they feel pretty smart. But believe me, the institutional side likes to make that retail crowd feel some pain. So a nasty correction could be, in the cards for the retail crowd feeling like idiots, right? All right, Qs. This is CQQQ. Alibaba getting a nice little pop to the upside. Oh, okay, Alibaba. Baidu looking better. There we go. All right, Baidu. That's good. I have some shares of both. So Alibaba, Baidu. So Baidu is here. Just some shares. I'm still down. I'm still looking to see. I mean, technically, I'd like to see if Baidu can get up to like 105 or maybe get up to my measure move here towards 115. I'm kind of hopeful that we have a spring to the upside there. FXI trying to get back to all-time highs. I've got a take profit up there at the highs. KWeb got some profit taking at $38. JD at 31.77, just selling some calls. Let's go here. 50-day, 200-day market breadth still looking okay. 50-day, 200-day looking okay. Kind of a timing indicator. Now it's not a sell signal yet. We're not overstretched to like crazy amounts where it's like 90% of stocks above the 50 and 200-day. It's not there yet. What other stocks? Costco, Walmart, Nike, Home Depot, Lowe's, MasterCard, Visa. We've got earnings coming up on all these soon. So just be mindful of that. I got a ratio spread on PGR I need to pay attention to. Palantir up to some fresh all-time highs as well. Interesting. Hims sideways, but off that big like 25% surprise is off the lows. Uber pulling back a little bit. Lyft, big pop on Lyft and it's faded. I'm hoping this just kind of consolidates. I'd love to see Lyft up into the 18s. Sector-wise, doing fine. Let's get some currency pairs and I'll let you go. Still long Aussie CAD, still long Aussie Swiss. No trade in Aussie yen, even though it's been a weaker yen. Aussie New Zealand is still bullish. I'm still long on this one. Aussie dollar, I'm waiting for a pullback, which we're kind of getting one. I'd like to see a deeper pullback. 6,400, 6,300. I start leveling into the dollar CAD or dollar Aussie dollar long. CAD Swiss, come on, bro. Give us a freaking bottom, would you? If this bottom holds, we get up to a little swing, consolidate over here, maybe a reversal pattern, getting back to a pocket, lots of support back here. Love to see some CAD Swiss longs, but just takes time, I guess. CAD yen, Japanese yen weaker. Swiss yen, just don't stop this thing. Like, don't call the freaking top on this. We're already at all-time highs again. I wouldn't touch this thing unless we have a big topping pattern, which hasn't happened yet. Euro Aussie, no trade. Euro CAD, I said if you faded the highs around 6,000, that's not a bad position. Just got to be willing to kind of level into it. Euro Swiss, just garbage. Maybe it holds support at 92.50. Euro Pound, surprisingly volatile. This pair is usually like the most boring currency in the land, and it's like really, really volatile. I don't do a lot of like discretionary trading. I just let a robot do the work, but it's been a lot of ups and downs. Japanese yen, again, I mean, this is up 900 pips since May. This is why this thing's up almost 2,000 pips since the bottoms in March. That's a lot. Euro New Zealand, nothing yet. Euro dollar. This is the turning point that I was talking about. Watching the dollar catch a bid, going back to like 100 or 101, 102. If the euro dollar sets up like a trendline break and then a pullback, you can short that. Maybe pull back to the same highs again. You could short that. I think the euro dollar pulls back to like a 112 handle. I think that's a reasonable pullback on the euro dollar. Pound Aussie, no trade. Pound CAD, sold equal highs at 87.50. That was a great trade. Pound Swiss, possibly a double bottom here if you're willing to dollar cost average in. You're not worried about the margin. It's a high margin pair, which kind of sucks. But leveling in here off these like April lows, we could range back up into like the 112s. Pound yen, I wouldn't touch this thing. Pound New Zealand, it's sideways. Pound dollar, just starting to break the trend line. This could be a topping pattern. So if we sweep the lows, we could have a left shoulder, head to neckline, pull back here. There could be a starting point to at least go from a inner trend line to an outer trend line. Take a swing low, swing high, pull back to like a 30 to 50% range. Just let the market find some equilibrium. It's possibly all it is, but enough to maybe get a pullback trade, swing trade, stop above the high, swing down to find some equilibrium. New Zealand CAD, give me a pullback here. New Zealand Swiss, still waiting. Still long on that one. New Zealand yen, no trade. New Zealand dollar, pullbacks are good. I wouldn't mind a pullback in here to start leveling in. That'd be small, possibly leveling in down here. So area 1, area 2 stop loss would be a nice little buffer below these levels. I still think this is open space. Little pullback, little pullback, little pullback, open space, just kind of grinds. I think we go back to like 63.50. If the dollar is going to be in a secular bear market, New Zealand dollar should go up. Dollar CAD still hasn't broken the trend line yet. I kind of hate this level. It's not low enough that I'm really excited to buy it. If this had like a big sweep above like 4,000 or like 3,900, then maybe that's a swing trade. Right? Maybe that's a swing trade to give you some more upside here, but it's a very messy support resistance area that I think we're just going to be trading in between. And then dollar Swiss catching a bit of a bid. This needs to catch a lot more of a bid. Get on the right-hand side of this trend line, pull back, get a little 3 to 5 wave move. This area for me, this pocket is what I'm after. I've got a pretty nice chunk of profit here from 86 to 88. My break even is around 80. I leveled in at the bottoms here, so my break even should be around 84. So if I can get out of here like 87, 88, I'm taking the profit again on dollar Swiss. But we've got a long ways to go to break that trend line. Okay, and then dollar yen, as we showed, ripping up here the last like 3-4 days. Your guess is as good as mine, but I'm staying out of the yens. I will consider selling the yen way the heck up here. I'll consider watching the yen for maybe some channel resistance, maybe, but probably not. Otherwise, I'm just going to stay out of the yens. So, all right, that'll do it. Wow, I went long today. All good. Hopefully that helps. Did a little bit of everything. Mag 7 indexes, top down, 6,300 resistance. If you didn't have a chance to go into your Discord for Pulver alerts, okay, if you got access to my Pulver alerts, go to the journal and check out this video. I posted this video yesterday. So 6,300 highs, 6,200 lows. Watch key levels for SPX. Check it out. Okay. All right, I'll let you go for today, and thanks for being with us. We'll see you tomorrow. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.